Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They've also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And we're going to talk about a pretty big news piece this week. I don't know if it's news or a better way to say it is just the way the world operates today from a financial and certainly monetary perspective. So I have Rob back in the studio this week. So Rob, thanks for joining me again.
Oh, I'm excited.
And this is piggybacking off a conversation you and I were having this morning and thought it was worth bringing to the listeners. So before we get into that conversation, I do want to point out a couple quick things in the chart, specifically gold, piggybacking off our conversation and look at the charts last week. We had a couple lines in the sand drawn, which gold blew through. The first potential resistance point we could see at this retracing 618 fib, pushed above it and has now today come down and touched it on the upside. Every one of these lines that we've drawn in the charts over the last couple weeks adds more and more credence to the argument that we have resumed the bull market, which began back in 2015 in gold. And I think that can be seconded when you continue to look at the rising price in silver, which has never put in any semblance of a bear market since gold began coming down last fall, as well as palladium, which also continues to climb. Silver pushing up above $28, closing in on that 30 number. And I would argue still gambling, but gambling that we're going to see silver push above 30 in this next move. And similar, platinum pushing up above 1,200, closing in on that 1,350 high we put in earlier this year, which was about a 5 or 6 year long high. So we're seeing the white metals scraping the top of the barrel, so to speak, and simultaneously seeing gold looks like it really did put in that bottom down at 1678 and may just be resuming the bull market. Now, what that tells me is it's no longer time to tarry. It's time to get moving on your gold positions, get that sorted out, especially in the silver, in the white metals, working with an advisor who can help you build a portfolio that takes care of and takes into account some of the ratio trading strategies that we like to employ here. Now, the reason I wanted Rob to come join me today was to talk about why are we seeing these commodity prices rising. Rob, I built a chicken coop last weekend. I bought about $600 worth of wood, and it cost me about $1,500. Why is that? why am I paying $8 for a 2x4 nowadays?
Yeah, I don't want to flaunt my wealth, but I just bought 4x4 posts, and I paid cash for it.
That's big time.
Yeah.
That's Ferrari money right there. Little bit of building material is out of control, and I think people are feeling it at the gas pumps as well. So Obviously the running joke is, of course, we're going to be talking about inflation today, but I think it goes a little deeper than that.
Yeah, I mean, this administration is acting as if there is no consequence to their spending. They've scratched out over $6 trillion worth of spending before they've even dealt with the $3 trillion annual budget. That's $9 trillion. $9 trillion is equal to all the gold in the world. All the gold in the world.
Every drop of it.
Yeah.
At today's price.
And they're behaving as if there are going to be no consequences for what they are initiating right now. I know that people have heard about the global financial reset. It's, the Secretary General of the United Nations was talking about that a few months ago. I was talking with a client the other day, and he's been to our conferences. He listens to our podcasts, talked to him numerous times, never did any business with us. And he just wanted to thank me for all the education that we had given him for over 8 years. And yet he has a local financial advisor that he decided to go with. And he's in the bond market and starts telling me about the Russian and Chinese involvement in the bond market and his length of maturity and how that's all working out. And I'm like, well, that works out great. But what happens if we do have a global financial reset and your bonds are now infinity bonds to where there is no expiration date? And he goes, I've never heard of that before. I'm like, well, it's been talked about. I mean, instead of the central banks just absolving themselves or the governments absolving themselves of debt, they can just make it forever debt. So there's no expiration. It's not a 2-year treasury. It's not a 10-year treasury. It's a forever treasury.
Like forever stamps.
Yeah.
Yeah.
He said, well, what effect would that have on my money? I'm like, well, I mean, there'd be no secondary market to sell your bonds back into because there's no maturity date.
So you're talking about putting money into a debt system where you're basically guaranteed some minimal percentage, which could possibly even be below zero, depending on, safest way to lose money, right? But you're talking about putting your money into something where you're effectively locking in an interest rate for ever.
Right, and there's nobody to sell your bonds to because there's no maturity.
So that sounds great if they're paying 15 or 18%, but what do you do if they're paying 1 or 2 or 0 or negative interest rate levels?
Right, and he thought he had it all figured out, and that's the danger that I see. A lot of people are out there, and they do great research. They really do study. This guy's studied a lot, and I can tell from talking to them over the years. But it looks like we're headed towards something that is unexpected. There's no way to prepare for a global financial reset. And people have been talking about that for years. It's not just me wearing my tinfoil cowboy hat. It's coming from the Secretary General of the United Nations. It's been repeated often at the World Economic Forum in Davos, Switzerland. This is something that they want. And it made sense to me. Instead of them just eradicating national debt, they just turn it into forever debt.
What fired me up about this conversation when we were talking this morning is relating it to a show we did a couple weeks ago where we were talking about the velocity of money,
right,
and money supply, and the amount of available cash that's out in circulation right now as is. So we can put a link in the YouTube video just going back to that, but it was basically the majority of currency that can be used for transaction today is not being used. It's sitting in effectively checking accounts. Now, it's sitting in commercial banking checking and demand deposit accounts.
Right.
But it's like 95% of America's money supply, M2 money supply, is sitting in M1 money, just checking account money. Plus, Janet Yellen's sitting on $4 trillion in the GTA, the General Treasury account. So, and Janet Yellen, case in point, not even before, I always forget our president's name.
Yeah, well, he forgets his own name too.
Yeah, I don't know if I should laugh at that or cry. Before Joe Biden's signature had even dried, new president, less than a week later, you've got Janet Yellen, Secretary of the Treasury, gets pulled back in. She's already talking about going after Bitcoin. They're already talking about creating some new, do I dare use the phrase, government-sponsored cryptocurrency?
No, they call it the Cryptodollar.
Right,
It was going to be rolled out in 2023. That's from the Fed and the Treasury. That was their expected rollout date. It's already done. I think they're probably going to roll it out sooner than later.
So it just becomes another issue of they've already got it written and sitting on the shelf. They're just waiting for the right crisis. So whatever the next threat is, maybe it is just 2023 and they work towards it, or maybe something does end up happening that allows them to get enough congressional support to push it through sooner than later. And now all of a sudden you have your forever money. That doesn't actually mean anything. I mean, you can still go buy stamps, but it doesn't tell you what you paid for them. And you can probably still go get dollars, and they're not going to tell you what they're actually worth.
Well, you'll have forever bonds with no expiration date and no secondary market value. But your cryptodollar could have an expiration date because, like you pointed out earlier, not only has velocity plummeted, it's at the lowest level that we have ever seen in 60 years. It's dangerously low. And one of the reasons they wanted to roll out the cryptodollar is so that they can bypass all the intermediaries between the Treasury and the people. The Treasury can literally issue cryptodollars directly into your account with a 90-day expiration on it.
So what happens then if you've got, because trying to think through who might be the biggest buyers of forever bonds. Well, I would assume it's people going directly to the Fed to buy them because, like you said, how could you have a secondary market for something like that?
Yeah.
So if there's no secondary market, and due to the COVID slowdown over the last year, we're already at the lowest velocity turnover of money ever. In history. All that's going to do is just permanently lock up more and more capital. Well, if that capital's getting locked up long term, what's the only way to get money back into the system? Make more money. So we've got $19 trillion in cash sitting in M1 money supply. You've
Plus
got
the $4 trillion.
$4 trillion at the Fed.
Yeah.
Potential money going into infinity bonds.
Well, it's not be going into the infinity bonds. They're going to convert the existing $27 trillion at varying expiration dates, which you can always sell into the secondary market. You got a 10-year bond, you're 2 years into it. You can sell it with 8 years left on it, and the interest goes on to the new buyer. Can't really do that with a forever bond, but you can absorb a $27 trillion, $30 trillion national debt if the interest rates rise up to 1.5% to 2% to 3%. Suddenly it would absorb 20 to 30% of the annual income of the government, and it blows everything up. In my opinion, that's why we are running the credit card up to unbelievable levels now, because they know the end is in sight. So the more they can borrow now at these rates and spend it, there is no accountability.
Well, and if I'm not mistaken, we're already closing in on 130% debt to GDP nationally here. So we're already overspent. We're overspent past the level that we can solve the problem.
Right.
So it's no longer about solving the problem. It's about a Bernie Sanders-esque just flat forgiveness of debt, and you just spread the pain out equally among 320 million people.
Well, you can't just forgive the debt because they're not going to forgive our car payments. They're not going to forgive our mortgages. They're not going to forgive our personal school loans, like they said they would, by the way. So they're not going to forgive their debt and make us deal with our debt. This is just a beautiful gimmick to suddenly take the 30 trillion or whatever it is and just say, okay, there's no maturity, so you can't get your money back, but it will continue to pay interest forever. So it's not a cancellation of debt, but your capital is gone. You can't get your money back.
Right. With interest forever.
With interest forever.
Yeah, sounds like indentured servitude.
Right. Now, what does that do to the corporate bond market? Don't know.
Don't know. Does it make it more valuable?
I don't know.
Because it still has time frames and specific capitalist structure that it has to work within?
Or municipal debt. Do the municipalities get to turn their debt into forever debt?
And then do they come in to potentially shut down or force through regulation that market under a similar system?
Well, I think the open door, if the federal government does want to move in to the municipal world, like what they did to bail out the blue cities at the beginning of the year, they can do that through the open door of the underfunded pensions. So we can see a move of the feds to we're with the government, we're here to help, and take over the pensions from the municipalities and even corporations that are underfunded.
I do love a good Reagan quote, by the way. So it sounds like my 3 times the price chicken coop was more than worth the money this spring.
It certainly seems like it, but the thing is, Miles, is that people are all hoping that now that everybody's vaccinated or whatever, I remember you telling me you walked into Walmart today and nobody had any masks on and you were trying to figure out who were vaccinated and who were Republicans. I thought that was hysterical.
You're welcome.
But people want us to get back to the way it was. We are not going back to the way it was. Let me tell people, not going to go back the way it was a year and a half ago. I am so sorry. The road ahead is going to be very different from where we were. What is it going to look like? I don't know. I know 2 things. One, we're spending as much in 1 year as all the gold in the world is worth. 2, this government is behaving in a way as if there are no consequences, like a teenager with a credit card, daddy's going to pay the bill, only there's no daddy to pay the bill. So they are behaving in a way that is irrational. Are there consequences? Not if they know what's coming. And I do think what's coming is the global financial reset. Every once in a while, I still get a call from a well-meaning person that tells me that President Trump is going to be back in office come July or next month. And there's a lot of nice people out there that are hoping, President Trump is still president and America is going to turn around. That is just not going to happen. I think the biggest job that we have here at McIlvaney ICA and here on Golden Rule Radio is to wade through the propaganda. Why are people being told everything's going to be okay, it's going to return back to normal, when obviously there are changes afoot that we can't even begin to understand, and it's happened so rapidly we can't even begin to adjust to? We are headed towards more change, not less change. And it's very difficult to wade through all the misinformation and understand what is it that we are dealing with.
So getting back to the cash position that we've looked at and just where the majority of currency is sitting today, do you see a roaring 20s, eat, drink, and be merry period around the corner prior to this? Or do you think that's done and over with?
I do see that. I think that's an excellent question, because there is so much pent-up desire for just that. Eat, drink, and be merry. I mean, the masks are off. People are downtown Durango right now. The restaurants are packed. People are traveling. They've got big plans for the summer. I think this summer is an eat, drink, and be merry summer.
And we may see that extend into the equities market,
yes,
which is already as
yes,
extended and overpriced as it's ever been in history.
Yes.
And that's been a point I've been looking at for a while now, is the Dow Jones could go to 14,000 in 3 months,
yeah,
because we have some major unwinding.
Or it could go to 44,000.
Or it could go to 40 or 50. And that's the point, right?
And who knows? And are you willing to bet everything on black? Or are you willing to put everything on red? I really think that people need to do exactly what we have been talking about here for decades. Put a third of their money in the metals, just gold and silver that they own personally. Keep a third liquid, keep a third in the markets. That's the only way forward. If you don't do that, you're foolish. And I think we should pick up on this on a later show, but the velocity of money makes it look like there is no spending and no turnover in the economy, but there is, and we talked about that this morning. It's not the fact that the economy isn't moving along. It is. The problem is that it's been drowned by unheralded amount of liquidity being poured on top of it. So
yeah, it's like currents in the ocean. Like, they're moving fast, but there's so much ocean sitting on top of them that you can't really see it from the surface.
Right. Or it's like having a bathtub where it's draining, the water's going out the bottom, but they're just dumping so much water on top of it.
Right, because we're talking about like M1, M2 money supply, which sounds like a lot of money, right? 18, 19, 20 trillion sounds like a lot of money. But
they don't even report M3 or,
Right, now you're getting up literally into the quadrillions when you're also talking about margin positions.
Oh, yeah.
So it is a drop in the bucket, but it's the petty cash drawer for the people in general, right? It's all of our petty cash money combined is just sitting in petty cash. But you do, like you said, you do still have these currents of movement that are still taking place. It's just they're dumping so much extra water into the bathtub that it's just drowning it out.
I think that's a brilliant analogy, because velocity M1, M2 really is the petty cash drawer. There's so much more out there.
Right. And Yellen's trying to empty out her petty cash drawer. So be prepared for that, I guess. $6 trillion already, guaranteed 3 more to come. It's only May, plus probably $3 trillion coming out of the Janet Yellen's TGA, another $18.5 trillion in spending money between you and me and commercial banks. A lot of money getting thrown around, or a lot of money with the potential to be thrown around, I guess is a better way to put it. So maybe the Dow goes to 50,000. But if you're paying $6 or $7 at the gas pump and you're now paying $20 for a 2x4, do you really care? Like, have you really gained anything?
Great question.
So that's going to do it this week for Golden Rule Radio. Rob, thanks for joining me in the studio in Tori and Robert's absence. So I appreciate you taking the time today.
Absolutely. Enjoyed it.
If you liked what you heard, hit the subscribe button, ring the bell. You can find more info on our website, McIlvaney.com. We're also on Twitter at ICA Gold or Facebook at McIlvaney Financial. If you'd like to speak with Rob, myself, or any of the advisors here at McIlvaney ICA about your personal portfolio, you can give us a call at 1-800-525-9556. Thanks for listening and have a great week.